Hello, I'm Jessica Amir, market analyst with Bell Direct. Today we're with investment manager Janice Henderson. Matt Gayden is the head of Australia at the group. Matt, thanks so much for having us in your office.
It's a pleasure, Jess. Thanks for having me.
So today we're going to speak about JHG, your stock, the headline stock, and then we're going to dive into some opportunities for 2021. But before we kick off, I just wanted to pause on JHG, the stock itself. Why should investors be holding the stock?
Janice Henderson's a global asset manager. We've got nearly $500 billion under management. We invest actively across all the asset classes.
And revenue and margins have been increasing despite the group seeing fund outflows since COVID-19. But importantly, your stock JHG is up 100% from the COVID-19 low as at the time of recording this. And the market's expecting your funds under management to grow. In fact, Bell Potter is tipping that your funds under management will end 2020 back at 2019 highs. But why do you think the share price is poised for further growth?
Well, I think, Jess, the important thing for Janice Henderson is to continue to execute as well as we have on our strategy. The strategy is titled Simple Excellence. Now, what we're trying to do here is improve investment outcomes all the time for clients. At the moment, we have more than 60% of all of our strategies over 3 years outperforming their benchmarks, which is a pleasing number. We've improved client experience with a number of systems that have gone in to streamline the conversation we have with clients and their experience. We have much better operational efficiency, and we've got a proactive risk and control environment. So those four things are key. If we continue to execute, I'd like to think that we're positioned for growth. Janice Henderson have a strong balance sheet. We're lowly indebted. We have continued to return excess cash to shareholders. We're providing a nearly 5.5% dividend on the stock. And we've also instituted a buyback of our shares over a number of years now. Most recently, in the third quarter of this year, we bought back $50 million of our shares. And finally, I think it's about the execution, continued execution of our strategy, that of Simple Excellence, where we're looking to continue to improve investment outcomes, client experiences, operational efficiency, and a proactive risk and control environment.
So funds under management is growing, your investment fees are increasing, and you also powered quite an attractive dividend as well. But just turning to 2021, as a fund manager, what do equities look like next year, and what are some key investment opportunities for next year?
Yes, equities, after a very volatile run during 2020, look to be very well placed, Jess, going into 2021. So we feel that the underpinning of what was initially fiscal stimulus to give markets their confidence, again, very low interest rates, and we don't think they're rising anytime soon. And the fact that there are a number of parts of the economy that are growing faster than people had expected, particularly here in Australia. We like the areas such as e-commerce. We can see materials starting to run with the fiscal stimulus in China. We know there are some challenged areas such as travel and energy, but we continue to search for those things that we think will grow. Pharma and biotech, clearly, with the search for a vaccine and the growth that we expect there, they're all important areas for us. So we think 2021 represents a great time to be investing in equities. On the fixed interest side of things, it's a little trickier because one can't just invest for the interest rate that they might get from a term deposit anymore. So we are thinking very much about an active approach to fixed interest, which requires an overall approach to credit markets and to vanilla fixed interest and bonds. And with those sorts of approaches, investors can, over the medium to long term, do better and create and generate a return that's uncorrelated to their equities exposure.
Mm-hmm. All right, speaking about returns, we've seen exceptional returns, in fact, outperformance in some ESG stocks, stocks that have got an environmental, social, and governance tilt. What should investors be looking out for when they're thinking about an ESG stock, Matt?
Yeah. So companies, Jess, that focus themselves around activity which is active and sustainable is key. We believe the link between a company's operations and sustainable activities will lead to better investment returns. And we need to identify those companies that are doing so successfully, and not just those that are maybe trying to save the planet. So when we think about the key themes that run through sustainable investment strategy, they're driven by the four key themes we see globally. Firstly, a growing population, climate change, an ageing population, and ultimately resource constraint. And we think about the areas of environmental and social under the key things that are being driven by that. So cleaner energy, sustainable transport, water management, quality of life, safety. All these are drivers to better investment outcomes where you can invest with companies that are active and sustainable in their approach.
And what ESG stocks have really taken your interest?
Yes, we've seen some very good returns from Marsh & McLennan, the risk and insurance provider, who advise up to 80% of the S&P 500. So clearly a very large and well-run business and involved in some of those sustainable areas I referred to earlier. And then Salesforce, the CRM database company, who are building out technology that helps companies like ours bring their IT into the cloud fully. And that's clearly much more sustainable than the systems we've been running on. So we like both those companies.
Wonderful. It's been a real pleasure to chat to you, Matt Gayden, the head of Australia at Janus Henderson.
Thanks very much, Jess.
And it's also worthwhile pointing out that Janus Henderson is a buy stock for Bell Potter, Citi and Macquarie. For more information on JHG, head over to Bell Direct's website.